You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, you know where to find us, the Options Insider Radio Network. And, of course, we put out a nice little fun bonus on this show for those of you who like to listen live. You can do so live noon Central, 1 p.m. Eastern via the old Mixlr, MIXLR. Grab that link, set it, forget it. If you are so inclined, you can follow us over there on Mixlr, too. Then you get notified the second we go live, not just for this show, but for TWIFO and for Option Block and for all the other stuff we do live throughout the week. So you set that once, you forget it, and you get all your fun notices, so you don't miss anything, which is nice. I know a lot of you guys are out there hardcore. You like to hear it instantly. You don't like to wait for the podcast. There you go. There's your solution for you. And, of course, however you listen live after the fact, hit us up. Questions, comments, insights, pearls of wisdom, all that good stuff. We do actually like to hear from you guys, usually, most of the time. 98% of the time, I'd say. We like to hear from you guys. All right, and joining me on the old program today, let's mix it up. We got the one day soon in the future, Dr. VIX, easy for me to say. He's on assignment. So let's welcome in his replacement. He's been on before. He is Mr. Kevin Davitt, the senior instructor over there at the CBOE Options Institute. Kevin, welcome back to the Russell Rhodes hot seat here on VolViews.
Mark, thank you for having me. I enjoy the hot seat. Bring it on.
Hope it isn't too uncomfortable for you. I know Russell likes to put tacks on the chair when he's away.
Right. He did do that, so I'm right at home, I suppose.
Well, there you go. All right. And also joining us from wherever the heck he's beaming in from today. You never know with him. It's always a fun little question of where the heck he is. Let's find out. We are also joined by the Greasy Meatball by way of Option Pit and also Carmen Line. Mr. Meatball, welcome to the show, and where the heck are you coming from today?
See, when am I going to get my music? Russell has his awesome Russell Weekly's Rundown music. I don't have any music for Where in the World is the Meatball, and that is that's like everybody's favorite game, isn't it?
But I don't want to encourage you to beam in from like playgrounds and trains. I want you to beam in from offices and fun places like that.
All right. Well, I'm in our world headquarters. So I
figure if I give you music, it'll just incentivize you to be out in the field somewhere, and that'll be no good for anyone.
Yeah. So I'm in downtown Chicago at our headquarters on LaSalle Street and enjoying the day. I may transition as we chat here about what's going on and about where I land. But for right now, I'm in our world headquarters.
All right. Well, let's try to keep the transitioning to a minimum as we transition on our own right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. This is indeed the portion of the show where we do exactly that. We review that week that was, and indeed still is, from a vol trading and trending and activity perspective. Like I mentioned, we are recording this and streaming it live on Friday, October 13th. Good old lucky Friday the 13th for all of you playing around with the home game right about middle of the session here. And most of the major indices showing a little bit of green on the screen, up about 1/4 of a percentage point. The NASDAQ actually leading the charge, up about 0.4%. And all that green plus the weekend means a little bit of red on yield. VIX cash. VIX had been flirting later in the week with trying to get back into that double digits. Actually hit there a couple of times today. Retreating back again, wants to go back into the single digits, wants to be a kid again, doesn't want to hang out in the double digits, right around 9.5 as we're recording live today. And it has been an interesting week, like I said. It's been kind of flirting all over the place. We saw that low come in last week. We haven't really retested that since, of 9.13 out there on the old VIX cash. That was hit on the 5th of October. We got in some ranges near that, but not that close to 9.13 this week. So a lot to unpack. Kevin, we'll start with you. You're our guest today, so you get pride of place. It's been a lot going on in the vol space since the last time you've been on, and certainly this week. What's been catching your eye out there?
Well, first of all, let me start by apologizing. Last time I was on, at the end of this, we'll probably call for a next week vol move, and I was bullish volatility in the near term, and boy, was I wrong. But this business
but it's all right, because you were just channeling Russell. That's Russell's job on this show, to be the perpetual buyer.
It really
of VIX.
is.
So you just filled his shoes.
But I wasn't just parroting him. I felt like we were due for some sort of pop, and how wrong was I? But it is all about
really
how you
wrong.
manage
Holy
that
bananas.
sentiment.
You know, you haven't been on vol views until you've been humiliated by the crystal ball. Once you have been, you fit right in.
Yeah.
Nothing like getting that done right off the bat. So outside of that, I mean, really, it's been a quiet week. I would like to trumpet more activity than there has been. And VIX option volume has, if you just look at like this persistent period of low volatility, been really, really robust. We've had a number of days where we broke volume records, but this week wasn't one of them. It was a bit of a stretch, and granted, we started off with Columbus Day, so bonds closed on Monday and really weak volume there. And but outside of that, I do think it's interesting that we are just past. Monday was a 10-year anniversary of the 2007 S&P 500 highs, so it's interesting to see how much has changed and some of the corollaries a decade later, and I'm old enough to be able to remember that still fairly well. So quiet, pretty much 1 point range in cash VIX this week. On a relative basis, not a great deal of volume, but still there's plenty for us to talk about over the next hour or so. So I suppose that's my lead-in. Happy 10-year anniversary. What were you doing when the market topped a decade ago? Hopefully not buying too much.
I was market making in GM, General Motors.
Mm-hmm.
It was lots of fun.
10 years ago.
And Novastar Financial. Remember Novastar Financial? That piece of junk?
10 years ago.
Doing RevCons in Novastar at the time.
You're all fired up about RevCons over the last couple of days here. 10 years ago, we were 10 months.
Reversal conversions. Remember interest rates?
All that exciting stuff. 10 years ago, we were 10 months into this experiment that would become the Options Insider. So what a crazy decade it has been since then. But, you know, speaking of craziness, Kevin, obviously your day job is educating the masses over there at the Options Institute. I'm curious, what's it been like over there for the last month or two as we've been really hitting these just plunging to new depths in VIX on an almost weekly basis? Are people hitting you guys up kind of en masse for VIX classes? Are you guys getting that question all the time? Why is it so low? Or is it kind of just business as usual over there?
It's probably a bit of a mix. So there's more interest in the subject just because there's been so much ink, electronic and otherwise, spilled over the lack of volatility that we've seen, and that's reflected in cash VIX and VIX futures for the better part of this year. And if you do talk, it gives us a good opportunity because we're animals, and like it or not, people want to believe that they can pick a top or a bottom, and not too many people 10 years ago picked the top in the market. And if they did, they got lucky. And very few people are going to pick the bottom on volatility if and when we get a meaningful pop. But it gives us the opportunity to talk about the driving force here, which has been the lack of volatility in the S&P 500, and linking that as opposed to people's perceptions of, maybe it's political or otherwise perceived risks. Economic data has been generally good. You have unemployment at, post global financial crisis lows. And besides the hurricane season that was unfortunate, really outside of that, there isn't too much unusual going on. So it's nice to get the chance to link lack of broad market volatility on an average basis today. The closed over close average has been pretty much 0.3% in the S&P 500. If that continues, it'll be the least volatile year since just after Kennedy was killed. So we're talking about Johnson administration. That's unusual. So the low levels of VIX stand to reason in many ways, despite people's belief that at some point it's got to go up.
That's an interesting point of reference all the way back to 63. Interesting data points you guys over there at the Options Institute have. Well, Mark, same question for you. It's been an interesting week out there vol-wise. Not the most volume-heavy week, but I have seen some interesting movements nonetheless. So what was catching your eye out there this week?
I mean, it has just been a slog. It is like a crazy slog this week. I've been shocked at the way that really the complex has normalized itself. That's what I think is kind of shocking, and we talked about this briefly yesterday, but think about the way the VIX complex looked in July and August and September. What was like the one overriding theme that the three of us talked about in terms of the cash to futures relationship, Mark? I'm sure you can add this in.
I'm sorry, I was typing some stuff on for the social media parts.
Nice.
I have many other gigs going on here besides hosting.
What I was saying, what was like our overriding theme the previous 3 months about the relationship between the cash and the futures spread?
Yeah, it was crazy wide, and we hadn't
crazy wide,
and we hadn't seen and it was partly due to the fact that these futures, we talk about how the cash will move almost willy nilly on a dime, but the futures a little bit more, I don't know if you call them calmer heads, but they seem to move a little bit more reticently. So as a result, to coin a phrase, reticent, I like that. But so to see that as a result, we see that gulf, that chasm widening quite a bit.
Yeah, and so what's unique is this time last month, if the VIX was 9.5, we probably would have seen the OCC future around 12.5, 1260, and probably, in fact, that's where it was. Here we are, VIX 960 again, and the no future is 1180. So what I'm seeing is a VIX complex that is buying into a low VIX. And this is the first we've really seen of this since the VIX started breaking 10. It's a totally different feel. And per kind of 10 years ago, I can remember us specifically standing around in the pit, looking at the VIX in the nines and saying, this cannot be right. There's no way it can stay like this. And obviously we were right, and we're kind of having the same relationship. It's bottoms and tops of VIX tend to be, at peaks and valleys. It's not, it's not like we have like a period. It's not like what'll happen now is VIX will meander back to 10.5, 11, and then in 2 years or 3 years we'll have a 20. We could be here for a while, and some event will draw us out. It's not going to be nor was it. We'll have an event that will cause a massive outlier, right? In 2007, it was what really kicked the ball rolling for the market. in terms of VIX was China warning on GDP. The market rallied, but VIX rallied the rest of the year. And we're going to be looking for something similar. So if for all those looking for a top, it's not going to happen when VIX is falling and the S&P is rallying. It's going to happen when VIX is rallying and S&P is rallying. That is when we're going to see the VIX go from 9.5 to 15. And in that period of time, the S&P is going to rally from 2550 where we are now to 2800 or 2900. That is where I'm going to be looking for the wheels to fall off of the market. Not right now. Right now, I don't like using the word all clear, but the market is about as all clear as it possibly can, especially with the way the complexes start buying into this low VIX. We got 32 days to expire, 33 days to expire, and the spread's only 220 with the VIX at 960. And that's going into a long weekend. All other things equal, when we come in on Monday, spread's going to be $1.80. That is super normal.
I was going to bring that up a little bit later, but, it's worth noting. You're right. We have been talking about that for ages on this show now, just how wide that chasm has been. And coming into the end of this week, you're right, it is tightening up. So maybe finally, I know you say all clear. I hate to use capitulation, but maybe there is some of that out there. They can only fight it for so long. You can only fight your reality for so long. And then eventually, the futures have to make some sort of recognition of what's actually going on. And maybe, like I said, I'm a little hesitant to go fully into that, but it seems like that is exactly what's happening out there, which is fascinating. Like we said many times on this show, Kevin, the answer to all things volatility lies in the VIX futures term structure at the end of the day. Speaking of VIX futures, interesting piece coming out of our friends over there at Rex Shares this week. They, of course, of VMAX and VMIN fame. They were on the show a few months back, I think. And interesting stuff. They put out an article up, I think it was on Seeking Alpha, kind of just talking up the short vol trade and kind of how it's performed in various ways, which we've seen this a lot, a lot of people talking about it, but here's some actual interesting data points going forward. If you want to search for it yourself, look for secrets to the hottest trade, shorting VIX, out there on Seeking Alpha. They may be a month or two late to the party, but the data is interesting none the same. And they have a couple interesting things here. Of course, obviously, we know there's a risk premium in the market. Your implied should be higher than realized, all things being equal. And they say, they have some graphs here to that effect. The 1 month expected volatility on average over 1% higher than the realized ended up being exhibited in the marketplace. Again, a good argument for at least harvesting a little bit of premium. Even the 1%, you could argue maybe a little bit on the low end compared to what the historical risk premium is in the marketplace, probably somewhere around 3%. They say if you start playing around with that time frame, it gets a little bit more interesting. And again, there's a lot of great charts in the article, so I encourage you to look for it yourself. We try to include some of those in our show notes for you, but they also have good charts about the relationship between the settlement of VIX and lagged 1 and 3 months VIX futures. When you start getting into that data, the average 3-month futures closing price 309 basis points higher than the level in which the future settled. During this period and the 5-year period ending this July, a short futures position in VIX entered 3 months before expiration settled on average just about 17%, 16.9% lower than where it entered. Of course, average futures 1 month price before settlement 95 basis points higher than at settlement. So again, a lot of data points showing short. Again, they have a dog in this fight. They have the VMIN. They also have the VMAX, but I'm guessing VMIN is where the action is for them these days. And say rolling 1 month contracts could be repeated 3 times as often as the 1 month contracts, leading to 3 times the average value difference during this period. Shorter duration strategy. Again, this gets back to what we were saying before. Getting a little bit shorter duration can up your game substantially. Hypothetically, would have seen more of a valuation change than shorting the 3 months contracts on average. Here, and we got a little bit of some interesting charts on that as well. Kind of interesting. Again, I'll encourage you guys to check it out for yourself, to see the charts for yourself. Also, VIX futures 1 week before settlement, an average drop of about 3.5% per trade when looking at the weekly VIX settlement contract. So a lot of great data. Again, kind of, if you didn't need any more ammunition out there, but reinforcing the notion that it has been a decent time for shorting vol. Now, we're not advocating any strategy. We're just putting a little bit of numbers and some math behind what we've been talking about for a while. I know, Mark, this probably doesn't surprise you, but it's interesting to see the data nonetheless. Wouldn't you agree?
Yeah, I mean, I'm unshocked by any of this. All of these, what they never like to talk about is the volatility of the P&L. And when you get that, start doing with the 1 month or the 1 week, you start adding a decent amount of variance to your P&L. Albeit, it's weird. the P&L breaks are very chunky. So, from that respect, maybe the 1 month, you'll have these little blow ups. But, I'd like to see a little more concentration in the marketplace. It's so easy to just go out and say sell vol right now because it works. I mean, it's been working for 5 years. I'd love to see, some people actually spend some time on downside scenario analysis, which apparently nobody cares about anymore because this is America and stocks go up. But, obviously the VMAX is just eating it, just like VXX and UVXY have. And so everyone just assumes it always has to be that way. Well, I'd love to see kind of the scenario analysis of, how did long futures do when we were flipped the other way around in 2011 and 2008? What is the scenario analysis when we're in a backward market? And my guess is that there's going to be a positive return on certainly the 1 month future, maybe not the 3 month. And that would be kind of an interesting thing to play with. Have we talked about, at some point, Mark, I do want to talk about kind of what I'm seeing in some of the further out months and some weird breaks in VIX term structure. I don't know if now's the right time, but there's some people that basically have said nothing is happening for the rest of the year, and I beg to differ.
Let's get Kevin's thoughts on this, and we'll wrap it up, and then we'll get into the term structure. How about that? Kevin, you come from a futures background, actually. That's kind of where you made your bones a bit in the futures options before you getting lured to the dark side of the Options Institute. Obviously, this is data that you guys have probably seen in some way, shape, or form, but kind of all put together. Any interesting thoughts from this as you see yet more data arguing on the side of the short VIX, short vol trade?
No, I mean, I think when you talk about options or strategies like this, and you paint with a broad enough brush, which this is doing, it's going to that argument in favor of selling stuff, whether it's wing options, period, or what have you, over the long haul, if you're capitalized well enough, that is a strategy that tends to win. Okay. 44 years of options history would kind of back that up. And so that doesn't surprise me. But to the Greasy Meatballs point about when you get in there and you're dirty, it's easy to paint with a broad brush. It becomes a question of in those handful of weeks or couple of weeks or periods of volatility, and to Sebastian's point about persistent volatility, how do you manage that? What's your P&L look like then? Alarm bells go off in my head anytime you hear stuff like it's got to keep doing this, because a broad enough consensus, it a little bit reminds me of, just to bring it back a decade again, the real estate has to go up because God only made so much of it, or some ridiculous mantra as far as that goes. And clearly that's wrong. But if you tried to pick the top in real estate in 2005 or 2004 or 2006, you could get banged up really, really well. And that's kind of what you see if you're trying to pick those vol spikes here. And then the other thing Sebastian said about how does this do? Because what we haven't seen for arguably 6 years is any stretch of persistent volatility. Every vol spike has been, the sellers of that vol spike have been rewarded since summer, fall of 2011. That was, for those that don't remember or still trying to forget, you had European sovereign debt kind of reach its apex, its zenith, and then in August of 2011, you had U.S. debt downgraded, and we saw months of high and inverted volatility markets. If we had something like that again, how is this risk managed? Because it seems like the only way to break out of this, the only way to force flip positions would be more than a handful of days of an inverted term structure. So I'm going to keep the lookout for that, just like Sebastian.
Yeah, I mean, I would encourage everyone to take a look at a chart of XIV from the middle of 2011. So let's say May of 2011 to May of 2012. Take a look at a chart of XIV, and you tell me whether you feel like that's still a can't-lose investment. The answer is that thing got destroyed, pummeled. It went from, I want to say 17, 18 bucks down to like $3, something ridiculous. And, there is a real, there's a real possibility that, on a nice move, XIV is up 130% this year. It's not going to give away. Good news, folks. It will not give away 130%, but it could give away. I mean, I could easily see a scenario where in a short period of time it gives away 40, 50%, because vol futures explode higher. All you need is to give away as a ginormous amount of XIV. All you need is a VIX in the 50s for a couple of weeks, and that thing is toast. So the short vol play, you're right, Kevin. If you are a bottomless pit of money, if you are super well capitalized and you manage and you sell in a strategic, systematic, capital managed, efficient way, premium selling works.
Yep.
But if I'm a retail trader or even a small fund with, a few $100,000 or a few $1 million, you better have a very, very well thought out capital plan in how you're going to approach trading. Otherwise, you are setting yourself up for disaster.
Speaking of VIX futures and breaking into the 50s, lay out your thoughts here on this far too much tranquility here in the long-term VIX futures, sir. Mark, that would be you.
Oh, right. Sorry, I was muted.
I'm setting you up for your conversation that you wanted to have.
I know. So, Mark, I kind of just want to, and I'd love Kevin's opinion on this. Take a look at VIX futures term structure between December, January, and February. And it is like jacked up. There is $1.25 between Dec and Jan and 50 cents between Jan and Feb. They are one of the strategies that we've played around with, and Russell talks about this one to some degree, is trading VIX future spreads where maybe you do something Jan Feb, short Jan, long Feb, and looking for some expansion, right? Because like right now, the Nov October spread is $1.50. That 50 cents to $1.50 on a times 1,000 is a lot of money. That's $10,000. I will take it. Or it's $1,000. I'm sorry. That's not so terrible. I will take that. But one way to mitigate that risk is to overweight a few extra Feb contracts. I'm looking at that spread. Why wouldn't I want to be short like a Jan Feb, long a Jan Feb futures calendar and hedge off some of the spike risk with December, with how cheap December is? How much wider can the spread between December and January really get? By my view, $1.25. That's about where the spread is between October, which expires Wednesday, and November, which expires in a month.
Yeah, I mean, December hovering around a 12.5 right now, and the Jan future right around a 13.80, so right around $1.30 right out there, which is a fair amount of blip. I bet your boys, the Thompson twins, are having fun out now with their various mullets and Tulums. Maybe they've coined a new strategy name for this Jan Feb D spread. The I don't know what they would call it. The buzz cut. The buzz cut. The longer term buzz cut. How's that? Not quite as sketchy.
Well, one of the things that's unique is people don't realize that, each VIX future or the people that really trade them actively understand this, but each VIX future kind of has its own volatility, right? So when you are short 1,000 Vega in Jan and long 1,000 Vega in February, you're actually on a weighted Vega basis. You're short Vega. So you could actually clean that up with some December, knowing that you're paying $1.30 spread that's probably not going to get a lot wider, and be in a really good position to play the Jan-Feb widening, if you will.
Speaking of things widening, we've widened out the show long enough to buy him some time, but now it's time for usually Russell's. This week's it's Kevin's Weekly Rundown.
Now, Russell's Weekly Rundown.
I know, Kevin, if we're going to get you on a lot, we'll have to look into changing that drop so you can get your name in there, too. How's that sound?
I'm all right with it. I mean, if I'm getting compared to Russell, the guy who's out there beating the drum for VIX all the time, I'm all right with it. We'll hold off on the music for the time being.
You two can get a ridiculous music mentioning your name that you could share with all your friends and associates.
All right, that'd be hard to argue with. If I might, just before I run through this, because there's not a whole lot, it's been a relatively quiet week activity-wise. The one, and I'm just saying this to be devil's advocate, thing that popped into my mind with DSJAN end of year, beginning of next year, is I believe the debt ceiling situation was punted out to December, and that might be the one fly in the ointment around that end of year time period that might sort of explain some of that potential dislocation, but overall, I really like Mark's thinking on that spread. And then maybe the one other thing is that volatility is a quintessentially mean reverting market. And in this persistently low volatility environment, typically what you see is if you go all the way out the curve, you're talking about 16 or something around that, and you continue to see that. So, maybe that market's expectation of if we mean revert, something around 16 is where we go is my other just seed there. So now let me get into a quick rundown, and it is going to be quick because this was a light week. Monday you had your 10-year anniversary of highs. You had a somewhat interesting spread where the November 8th 16 calls were spread against the November standard. All of these were pretty much spreads this week on the weekly stuff. The November standard 17s. So if I could get that 1 week time frame and slightly further out of the money, that was trading for 9 cents. We had highs for the cash VIX, unless something unusual happens this afternoon, around 10.5 on Monday. We had a settle around 10:30. Tuesday, I think it's worth pointing out that Thaler got the Nobel Prize in economics, and if we had a whole lot of time talking about rational versus irrational actors and whether we actually behave rationally or with what frequency, I think that's interesting. And the volatility market has a tie-in there. There wasn't anything really in the weeklies that caught my eye there. Wednesday, we had the weekly settle, and they expired at 9.96. This was the fourth weekly, which included one standard option cycle. Fourth weekly close settle below 10, fourth in a row, and the fifth ever. So we are in unusual times, but again, we have seen very, very low levels of realized volatility. There, the Oct 25th expiry, the 19 calls traded in size. They traded 16 cents or thereabouts, and about 16,000 times. The 20 calls, same expiry, so 25th, what is that, roughly 2 weeks from now, a little bit less. 50,000 of the 20 calls traded for a dime versus the no 15-16 call spread, and that traded a dime. So the package traded even. This thing I find interesting because, all right, let's just say you sell those October 25th 20 calls and you do not get a vol spike. You now have a November 15-16 call spread on for free, essentially. Granted, there's a maximum value there at expiration, no matter what kind of strike you get of 100, but being able to leg into free spreads is attractive. And again, I'm not mitigating the risk in that thing. Vol could spike in advance of October 25th. Thursday, we had the October 25th, again, cycle, 11-13 strangle. That traded 134, okay? So that range, I like looking at strangles, particularly when we're in a low vol environment. That strangle kind of implies an expiry range of 1434 to 966. That seems realistic to me. 1434 seems quite high. 966, we had our lowest settle ever on the 5th of this month at 913. So there's probably not a tremendous amount of downside risk in that thing. That said, would I want to be short it? That makes me uncomfortable too. So maybe that's why there's less volume this week, is because it's like, all right, this stuff is priced properly. Yesterday, Bitcoin made a new all-time high. Today, it blew those all-time highs out of the water. Maybe that's worth talking about. And whatever correlation you could draw about fear in the market or fear in fiat currencies or what have you. But Bitcoin, as of today, has a market cap greater than Goldman Sachs. And then my one last point, again, because I'm stretching here this week, but I think this stuff is all somewhat salient and interesting in a broad market, from a broad market standpoint. I looked at the transactions that used paper money. So again, we're talking about Bitcoin here. Paper money transactions occurred in 45% as recently as 2011. So 2011, roughly half of transactions were cash-based globally. Now it's down to 27%, and that trend continues lower. So cards or something other than that, cash is going the way of the dinosaur. So I will leave it at that and let you guys chew on the bone I threw out there.
That's a meaty bone, sir. I like what you're talking with the VIX, weekly strangles. Russell's been tossing out a few of these too. Some of these strategies that we haven't really seen come into bear in weeklies, all of a sudden the last few months are starting to pop up, which is kind of interesting. I'm also with you that it kind of makes me uncomfortable both ways. I don't know if I want to really be super long or super short. A strangle in the VIX weeklies out there. It's not a use case you see for them often, but that's kind of, speaks to the evolution we've seen out there in the weeklies, that they are indeed getting a lot more use cases than they were probably initially anticipated for, which is kind of interesting in and of themselves. Are you guys out there slinging VIX weekly strangles? I'm guessing no, but you never know. Hit us up if indeed you are. Moving on to the big mothership, the big VIX options. Like Kevin mentioned, it wasn't Rock'em Sock'em Robots week this week. Certainly no, 2.6 million contract days like we saw a few weeks ago, but still fairly robust. The ADV hovering right around 870K. Today looks like it's on track to get close to that, almost 650 on the tape as we approach here about 2/3 of the way through the old show. And throughout the rest of the week, it's kind of been slightly shy of the old ADV. Yesterday, about 667, 614K going up on Wednesday. 775 was pretty much the highest day, but today looks like it might beat that. 775 out there on Tuesday and 414,000 on Monday. About 3.8 to 1 calls over put. So getting a little bit richer from a call perspective. I guess some of that also factoring in what's going on in the actual index itself is going to drive some of that call put, of course, as a result. Going back out there to our top 10 hot, big VIX strikes, the number one open interest positions out there, number one with a bullet this week. Once again, the DEES 25 calls. Yes, our friend here with the old, the old risk reversal with the kicker is still dominating the VIX charts. 606,000 open of those. It's far and away our number one hot strike out there in VIX land. Then we drop again, number two, almost 200,000, about 170,000 to number two, which is 437,000 for the DEES 15s, also part of that three-way. And then we go back to the OC 25s. These are 407,000. That was also a popular strike with our friend. I think he made it popular with everyone else, hence the still large amount of OI that is open on that strike. Number four, the OC 20s. 361,000 there. Number five, the OC 15s, 343,000. Number six, the first put on our list, the DEES 12 put, also part of our three-way there, 342,000. So you take out those those three strikes, and that's our friend's big trade right there. You're talking, well over 1 million contracts just in those three strikes alone. Number 7, actually, the second and last put on our list, the OCT 12 puts. With about 335,000 out there. Number 8, the OCT 21s, 302,000. Number 9, the NOV 20s with 273,000. And rounding out our top 10, the NOV 17s, the comparatively reasonable NOV 17s, 271,000. Total about 13.4 million contracts open, about 10.6 on the calls, and about 2.8 million on the puts. Let's move on, Mr. Meatball. Any other activity out there in the big VIX options that's catching your eye, as well as I think you're a big fan of some put ratios out there. That my little birdie's correct?
Yeah, going into the day, I was long a lot of puts. I had on the 11.5 puts, the 11 puts against short, the 10s as some different spreads, long at varying levels. Kind of took all that off. The stuff that's deeply in the money the Friday before with the VIX futures completely, like you said, just completely saying we give up. I said, you know what, I'm going to maybe take some money here. And then I kind of like this trade. I bought the 10.5s and sold the 10s, and I did that for even money, 1 by 2. The trade is going to make money anywhere above 9.5 settle, and really is not in any real danger. I mean, even if the VIX stays at 9.5, where is the VIX future going to be Tuesday afternoon? 980, something like that. So I think I'll be given clearance to get out. I'll be given clearance to get out, even if things continue to stay here. But I'm counting on at least coming in Monday and getting a little weekend adjustment and. VIX is back to 1010, and the future just kind of sits here for a few days. I'd love that. And then I'll flip out of this thing at a quarter. Let me tell you, folks, there's nothing more that I like than getting something for nothing and selling it back for something. That is like Amen. The option trader's dream.
You've been hanging out with the Rock Lobster too long, sir, getting all your juice for free. But yeah, that's an interesting one out there. The 1 by 2. We always talk 1 by 2 is kind of the other way, selling 1, buying 2 on the upside. You're buying 1, selling 2, obviously, on the downside. But interesting stuff there, nonetheless. Let us know what you think of that, listeners. The 10.5, 10 were the strikes out there in the old VIX. Moving on to another product you guys like to tear it up with these days, VXX, just prints contracts on any given day, hovering right around 35 right now, so already well off those post-split highs we were saying is going to happen. And sure enough, it has interesting stuff. I want to ask Kevin, because I know he reads the notes, so he'll be well informed. So instead, we'll play the Quiz the Meatball game once again, because it's very fun. Mr. Meatball, if you had to guess right now, what is the number 1 with a bullet big open interest position out there in VXX? Take a guess, sir.
I'm going to go out on a limb. And I'm going to say I'm debating either the 50 calls or the 30 puts, one of the two. I'm going to say the 45 or 50 calls.
Like front month, or are you talking like Jan, Dece?
I'm going to say November.
November. Okay, a fairly no 30 calls, so no 30 puts or 50 calls. Reasonable. Actually, number 1 with the bullet are 107,000 of the Jan 2019 10 puts. Kind of interesting. 10. That's a little. A lot of people write in for like 20. 10 is pretty hardcore. And
I mean, I get it. I mean, how much? What's the market on those right now?
I think they were 25 cents last I checked.
If you look at the history of VXX, that is not a terrible trade. I would probably rather do that in something like UVXY, but the likelihood that those end up being worth $4 is pretty high, wouldn't you say?
Yeah, those are offered at about 25 cents right now, so you can scoop up all you want. Someone picked up another 500 today of those bad boys.
Maybe who's saying it wasn't me?
10 is a little aggressive because that's right around the spot where they start to consider, reverse splitting it again. So your max you're going to get is a couple of points to the downside there before they split it up again. But still, it's an interesting trade. I'm with you. I'm a little more in the I think 20-odd range maybe or something like that. But hey, I'm not against it. I like the I thought you would find that fascinating. I don't know, Kevin. You must have a lot of people coming into the Institute want to talk VXX. It's obviously one of the more popular names out there. What do you think of these? Number 1 with a bullet are the Jan 2019 10 puts for a nice whopping quarter.
I would admit that I would have been way off had I not looked at the notes. That is not one that I would have that would have been on my radar. And I'm trying to process why that might be, but I'm coming up a little bit blank right now. Whenever we bring people through here and talk about the volatility complex, but for lack of a better term, trying to at least, no matter their level of sophistication, give some sense of the importance and the relationship that term structure plays in a lot of the exchange-traded products is key. And I might have said this the last time I was on, but if you don't, like, these are things that do what they're supposed to do around volatility events, and outside of that, they tend to be path-dependent products. And if you don't understand what you're trading, shame on you, right? Like, you are going to lose money, so your audience is not going to fall into that category because clearly they're already listening to something like this sharp group. But the opportunity then, if you do understand how something like VXX is constructed, to potentially make money from the lack of knowledge on the part of others is also opportunity. So I would leave it at that. And I'm not making fun of anybody, but a fool and his money are soon to be parted.
Yeah, these might be, I think, a little bit of a bridge too far for me. I like a little bit higher. By that aggressive by Jan 2019, like I'm not offended by it, but I'm kind of on the might be a little bit too much. But then again, we've seen this thing erode almost 10 handles already, so crazier things have happened. Speaking of crazy things, it's time for you crazy cats to join us. It's time to open up the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, the portion of the show where you guys take the reins, questions, comments, insights, all that fun stuff. By the way, Mark, we suggested the Yule log for that Dece Jan or Jan Feb VIX futures trade. The boys at the Thompson Twins have already weighed in. They say they want to call it the Cousin Eddie. I don't get the reference, but I guess they like calling that the Cousin Eddie. What do you think?
Yule log is far better.
I think Yule log is far better. I'm not. I don't know what they're going at. Maybe some inside joke there for the Cousin Eddie. I like Yule log a little bit better, a little more relevant, I think. Speaking of relevant, Kevin, we ask a lot on the show. People always ask us, what's the way to play vol going into earnings? So we thought we'd turn it around on our listeners and ask them. We asked them, hey, earnings season almost upon us. What is your favorite way to trade earnings using options? We gave them 4 kind of basic strategies. We also attempts. We also have them write in with some of their own thoughts. So we gave them the 4 choices are selling premium. So it could be a straddle, iron fly, or a fly, or just a straight up condor. Could be buying premium in terms of buying a straddle, buying a fly, buying a condor. Could be the old fashioned selling puts or put spreads, always a popular one, or buying call/call spreads. Mr. Kevin, you're our guest. I'll give you pride of place, sir. What would if you had an inclination to lean some way, which way would it be? And then, more importantly, what do you think our audience, where do you think they're leaning?
Man, so what product are we assuming this is on?
This could be on any. This could be on an individual, usually individual names, so your Teslas, your Amazons, so on and so forth.
Okay. Well, again, we're painting with a broad brush, so my inclination would ideally to try to harvest some implied volatility sensitive to earnings that tends to move up, some premium there. So in a vacuum, I would like to sell some premium in a defined risk capacity. So whether that's a fly or a condor or something like that. And pick and choose spots. And there's a handful of products that I follow that I've become intimately acquainted with, and those are usually the only ones that I do. I'm not a volatility seeker. I try to stick to things that I understand, and maybe I said this last time I was on, but if I traded Amazon, I would be broke 10 times over because it's just not something I understand, and I'm not disparaging that. It's just a good thing I don't. But that's the art of knowing the product that you trade and what works for you. So, like, if I'm directional, I do like 1x2s where I buy one and sell two in the direction that I'm leaning, and I try to be strategic in earnings season and know what a statistically strong range is for where I might target my two short options. But I'm really kind of interested in what the feedback from the audience is. So that's kind of my answer, non-answer. It really does depend on the product that you're trading. From an overall standpoint, I would like to try to bring in a little bit of premium. So Condor, Butterfly, try to collect some of that. And if I got to be directional, I would like to do so in a ratioed manner, because if I'm wrong, my premium risk might be zero, or it's even sometimes possible to get paid to be wrong directionally. So
you can tell you've been hanging out at the Institute. You got a bit of a professorial answer there too. You've been trained well by Mr. Rhodes.
Yeah, I'm just looking to keep my job.
So I'm going to put you in the selling straddle-fly Condor camp for now. Mr. Meatball, has your vote changed on this, or are you still the same camp as yesterday, sir?
Still the same. I'd rather, for round earnings, I almost never play them because they're a crapshoot. That, if you're looking for edge and volatility, then earnings are not the place to go. But if I'm going to do it, and every now and again something will get out of whack, I'm almost always buying the straddle and selling the wings, almost invariably, or something along those lines. That is almost always my approach if I'm going to play earnings, because I'll only do it if something is grossly mispriced.
There you go. Well, our audience, interesting votes. One for selling premium, one for buying the premium, buying the straddle. So far, it's buying call, still leading the dance. 38% saying buying call / call spreads. A little bit of a surprise. I thought our audience would lean a little bit more heavily towards selling of the premium. 28%, number two for selling puts, the old standby, selling puts and put spreads. Then 24% saying selling straddles or flies or condors. Only 10% coming in to buy straddles or flies or condors. So only 10% on the Sebastian tip there. A lot of people coming in, chiming in with their own versions and flavors. Peter Pan says he likes to buy at-the-money straddles, but only buy them if there's an average true range of greater than 2. He's a techie, I guess. I'm not into that technical analysis. But whatever floats your boat. If you like that, go forth and prosper. Trader J. Ray says he usually likes a collar or a protective put around earnings. Everything else held over earnings is a gamble, not a trade. I think we can all get behind that. We don't really advocate earnings trading here, but everyone's always asking us, so we thought we'd put the onus back on you. See what you guys are up to here. Let's see, we got time for a couple of quickies here. Erin Snow writing in. I'm not sure why she sent this. She said she lowered her portfolio delta to from 651 down to 3.92 because she's going to a conference. And so she wanted us to know. Okay, well done. She also included some 5-minute chart of VIX. I don't know what that has to do with anything, but glad to see you're mitigating your deltas as you travel there, Aaron. And then we got, what is this? T-Mal in the chat room says, American stocks go up. Hashtag America F yeah. So there you go. He's a big fan of this bull market. And your old friend, Contango trader Mark says he wants to go get a loan. He wants us to go get loans and then buy long-term VXX and UVXY put spreads and then check our debt to gains ratio. And then he includes a gif of someone dancing around gangsters. So there you go. That's some of our crazy mail for this week. We got a lot more longer, in-depth ones. Unfortunately, we don't have time for those this week, listeners. Instead, we got to keep on rolling right on into our final segment. Yes, it's time for Kevin's favorite part of the show. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, once again, another week, another almost flawless bullseye prediction from me here in the crystal ball. I went out at 9.65. I adjusted myself a little bit lower last week. I felt a little bit lower, but not quite as low as we were going. I felt 9.65, and as we're finishing up the show here, right about 9.6 here. So I'm liking that. I'm going to call that. That's pretty much as close to a bullseye as you get in VIX land. So I'm going to take that one all the way to the bank. Mr. Meatball was number 2 with his 10.01, so he was feeling a little bit north. And Russell, as is his wont, was on the upside. Not quite as aggressive on the upside as he usually is, but 10.31. So his gig at CBOE has meant he's just losing horribly in this. In this, they make him buy the VIX, and so he's losing horribly in our crystal ball as a result. So that means as a winner, I get to choose if I want to go first or if I want to have someone else. I usually like to go first, but considering we have a guest, Kevin, on, and he doesn't get to play that often, I will be nice. I will be charitable. I will surrender my first chair to Kevin and allow him to pick first. So have at it, sir. What do you say?
All right. So I'm not going to hopefully be as far off or nearly as far off as I was last time, and I'll temper my expectation. But I like, and this is not an endorsement, but I do like the Meatballs ratio 1/2, which is targeting 10. And I'm going to go with a 10. I thought originally when I heard his last week prediction was 10.01, that he was doing a Price is Right type of thing where you just go 1 over. So I'm going to go 10 a week from now. Slightly higher. I don't see a whole lot of downside, but I just don't see the catalyst for meaningful upside. Final answer, 10.
There you go, 10. Interesting. I like it. And Russell's not here, so his ghost will pick for him. And his ghost is even more of an aggressive vol buyer this week than he usually is. So his ghost is going to go for a nice whopping 28 out there in VIX. So he's really going whole hog to buy himself some vol this week. I kind of like where we are right here. I keep adjusting a little bit lower each week, and that approach has really been suiting me quite well. I'm not like you guys. I'm not really feeling a lot of upside or nor a ton of downside. So I'm liking pretty close to where we are right now. I'm going to say right about almost here next week, about 9.55 out here in VIX Cash. See if I can go for a few weeks in a row of bullseyes. We shall see. And last but not least, Mr. Meatball, I know what you're thinking with that 1/2, but what are you saying here on the crystal ball? Are you hedging your bets in the crystal ball?
Yeah, I mean, so I don't really have a lot of options because you guys both took my. So Kevin took my first guess, and then Mark took my second.
You got to win, then you get to go first.
Yeah, so I'll tell you what I'll do. I'm going to do pretty well if we're all right. So we're talking next week. So I'm going to be in a pretty good shape if we're 10.25. So I will say 10.25. I'll be a happy camper if that happens.
Yeah, you'll be happy regardless if that one goes out there. So there you go. You're playing the Russell game, but not quite as aggressive on the old buys. All right, listeners, that music means we've come to the end of another epic journey through the world of volatility. What a journey it's been. VIX futures, spreads, crazy VXX out of the money puts, all sorts of weekly strangles and craziness and ratios and VIX options. Some of your crazy comments and questions, and of course, peering into the future. It was fun. Kevin, before we go, let's go one last time around the horn. Your CBOE guys, like your blogs over there. You and Russell and everybody else always posting on there. What's coming up on the old CBOE blogs, as well as what's coming up over there at the Institute?
Russell is back to doing his weekly rundowns on big trades in VIX, VXX, in the Russell, in the SPX. That is always worthwhile weekend reading. Looking out a little bit further, maybe toward the end of this year or potentially early next year, Bitcoin futures and hopefully options on those futures will be a reality no matter what you think about Bitcoin right now. A product with a high price and considerable underlying volatility gives you opportunity to potentially make money.
That'll be fun.
And so understanding what's coming to market would be a good idea for anybody that's interested in products like that.
You like all things Bitcoin? Tune into our show in about half an hour. Twifo, we get into some Bitcoin on that show. That for some reason that's become our de facto Bitcoin show. Even though you guys over there at the CBOE obviously working on those cash settled futures, hopefully we'll see those get approved and we can see those get launched and listed sometime soon so we could finally have some sort of concrete listed derivative product on Bitcoin. How many times people have been hitting us up asking for something like that? I've lost track. So anything that could somehow deliver that would be cool. Head on over to CBOE.com to learn more. Be sure to check out the Institute tab there to find what Russell and Kevin, the rest of the folks over there, are cooking up. Maybe you want to take a webinar or a class. This show isn't enough for you. You want to get a little bit more, then you could do so over there. And speaking of which, Mr. Meatball, if they want to do some learning in the vol space, what can they do, sir?
Go to optionpit.com/blog. We're posting content there twice a day at a minimum. There's all sorts of great stuff to check out there. Blogs, videos, all the information you could handle. And if you've got questions about, if you're interested in getting some exposure to a volatility program that is in fact hedged, reach out to us at Carmen Line Capital. We are a long carry plus curvature type fund. So, we're a way of trading vol and being able to sleep at night too, we like to think. So feel free to give me a call at Carmen Line. You can go to our website, carmenlinecapital.com, to check us out. There
you go. Get some of that juicy VIX 1x2 action over there at Carmen Line, or just get some VIX learning on over there at optionpit.com. On behalf of the Meatball and Kevin, who is nicknameless, but we'll have to remedy that going forward if he's going to join us again, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing, and of course, for sending in those questions. Keep them coming. Read them all, even if you don't answer them all. If you like Bitcoin and all that other fun stuff, you want to hear more details on that crazy gold trade we talked about last week on Twifo, join us in about 27 minutes here on the old chat for Twifo. If you're listening, of course, on the podcast, just download that wherever you get your favorite shows, and you'll be good to go. And we'll see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.